I was wrong. After Friday's bloodbath, I thought we were seeing the makings of further downside risk post a quadruple witching. Now, I spoke about this phenomenon at length over the weekend, so check out those episodes for a more in depth view of what a quadruple witching day is and what tends to happen after. But in short, what tends to happen after these witchings is that the following week sees exhaustion within the markets, particularly the S&P, and prices decline. Funny enough, I even had a dream this morning where I checked my phone and silver was at $8 an ounce and I couldn't get to an LCS in time before the prices shot back up. But that nightmare never happened. And that nightmare aside, we woke up to find that silver was flirting with the $26 level again. Now, perhaps I should have consulted with the BMI to get a better read on the market. Now, what exactly is the BMI, you ask? Well, it's not the body mass index, which, I'm relatively thin. Don't need to worry about that too much, but it stands for the big money index. Now, once you take a look at and understand the big money index, you may see why a strong sell off did not continue at the start of this week. But before we get into that, check out the first link in my description. I'm building a waitlist for one-on-one video and audio calls to speak with me personally regarding gold, silver, finance, etc. I'm currently working to get my CFP, Certified Financial Planner designation. So check that out. So let's take a look at this FX Empire article and actually take a look at what's going on here. This article talks about the quadruple witching day last Friday, historical performance of it, and what big money has been doing to counteract some of the trends that I mentioned over the weekend. And I quote, so nearly 90% of the quad witching days going back to 2015 were red for stocks. So Friday sell-off doesn't worry me. Rather than worry about single sell-off days, my data points to a strong undercurrent for stocks. The big money index, BMI, has been trending higher lately. If you're new to the BMI, it tracks big money buying and selling on stocks on a 25-day moving average. If the index, blue line, is gaining, the market usually follows higher. If it falls, it usually precedes a pullback in stocks. Right now, it's at a 6-week high. So this is the big money index here. As you can see, the red line stands for overbought. And down here, you have a green line, which stands for oversold. And generally, when you take a look at this index, you can see it on other articles that talk about the big money index. But it's rare, actually, to have the market be oversold. And it is rare for it to be in overbought territory as well. But again, we're approaching overbought. So who knows? We might see something in the future where prices might decline soon. But right now, there's a strong undercurrent, as the person was saying, in big money, which is this light blue line here. And they talk about some of the sectors where they start to see some buying and some selling. They saw buying in technology, and they start to see some selling in value stocks. But overall, the quad witching day was just a day. It seems like that for the week ahead or the week after, which is what we're currently in, there really isn't that much selling that may happen. Now, with that being said, all of you who are on Wall Street Silver, that massive buying day may not be coming this week where prices are just going to decline. But to be honest, $26 of silver isn't that bad, given that we've been hovering around the $28 level for a while. So guys, I'm actually curious to hear your view on what we've been seeing in the markets. Do you think we may still have some down days this week? Let me know in the comment section below. Thank you for watching. Please hit that like button and please subscribe if you're new. It's Black Bullion for goldandsilvertoday.com.